that are involved with our business and also for employees. So this strategy remains consistent. We see no reason to change looking forwards, and it's served us well for a number of years to date. So we'll have a look at the 2018 full year performance. So I'm very happy to report that you see a nice green slide before you with numbers all moving in a positive direction. So first of all, on your left, you can see we've had a 6% increase in our gross revenues. So this particularly driven by excise-led pricing in the domestic market, a growth of our exports volumes and our cut rag exports, softened slightly by an increase, I would say, in consumer stretch, so therefore impacting the volumes in Kenya. So that flows through to our net revenues at 11%, and you can see the government contribution to revenues up 1.3. So this is a combination of the taxes that we pay to the government, whether it be PAYE, excise, VAT or withholding tax, all going to the government coffers. This result softened slightly by a reduction in the Kenyan volumes and therefore the excise that we're specifically paying to the government, but still an increase to government coffers. And I think during last year we paid a total of 18.3 billion Kenyan shillings to the government. Our operating margin's very good news at 1.3 percentage points as well. So that shows you that the cost base for the business, our investment strategy is paying off. So we're seeing some growth whilst we're still managing to keep the costs in check. So our operating margins at the moment tracking at around about 30%. And our profit after tax, extremely good news, up 22%. So we will be reporting profit of 4.1 billion Kenyan shillings in 2018. Great news for the shareholders as well, a 35% increase in the dividend per share, so coming in at around about 35 Kenyan shillings. So a very positive return for shareholders also. So I think you'd agree we are extremely happy with this performance from 2018, and we consider this to be a very good growth trajectory for BAT Kenya. We have some notable successes, I think, that have driven the performance in 2018. The first thing that I will talk about is the portfolio transformation. So this is our investment behind our brands to make sure that our consumers are able to choose great quality brands in the marketplace. We've been involved in some migrations. This means some of the local brands that we have here in Kenya have been migrated to what we call our Global Drive strategic brands. So the example on your left there is Pall Mall by Safari, and we've seen a fantastic performance for this brand in the marketplace, probably over the second half of last year during the migration phase, and the introduction of a new variant there, the red pack called Pall Mall Plus. What this has done for the business is that it has driven our Global Drive strategic brand performance by 126% in 2018. And this is important for us because we believe that the portfolio will be in great shape to be highly competitive with any new competitor entries or current competitors in the Kenyan market going forwards. We've revamped our customer-facing programs. So this is our relationship with the retailing environment here in Kenya. There's over 30,000 retailers in the marketplace, and this is how we position our brands at retail and also how our consumers see our brands once they reach the sales point. And finally, big investment behind the people that work within BAT, so our talent agenda, to make sure that we have high quality talent in the business that buy into BAT's strategy and are able to drive sustainable results going forwards. And you can see that in 2018 we achieved second year of certification from the Top Employer Institute, which is an international organisation for Kenya, as Employer of the Year. Also from the Federation of Kenya Employees, also second year in the row, we won the overall Best Employer Award in Kenya. So this is a great testament that we have a great team in BAT Kenya and that we're doing the right things for our people. few other pieces of external recognition that happened in 2018 which are very important to us. We like to receive accolades after all of the effort that we place in the business. So also certified as top employer in Africa in 2019. We got some great results from the Energy Regulation Commission, who have certified our energy usage. 2 awards from CAM in sustained high performance and fuel savings, and also with Think Business on the sustainable corporate social responsibility position for 2018, and again we were the winning company in Kenya. So some very nice accolades for the business that we're all very proud of. If I turn to the Kenya domestic market first, so the Kenya domestic market revenues up 5%. This translated into a 1.2 percentage point growth in our market share. So this is the share growth within the legal part of the Kenyan market. I will talk about the growth of illicit trade in just a second. I've already mentioned to you the growth of our global drive strategic brands, and these are the portfolio on the right-hand side. And you see for Kenya specifically, our excise duty payments actually went down by 2% on the back of the volume reduction and the consumer stretch that we saw in the market in 2018. The manufacturing hub based here in Nairobi continues to perform extremely well and is a highly competitive hub within the BAT factory network, which is great news for us. We are supplying 9 markets with finished cigarettes outside of Kenya, and last year we produced 9 billion sticks for exports out of the Nairobi factory on Likoni Road. The share of the factory output, so in terms of the manufactured production, about 65.2% is for exports, and the balance for local consumption. And the value of that, over $80 million, so we're still one of the biggest dollar generators in the Kenyan market. And as you can see, these numbers are all either flat or slightly up on 2017. Another good story from the leaf and cut rag part of the business. As you know, we have around 5,000 farmers in Kenya who work closely with BAT to produce high quality tobacco leaves, which we then process. In 2018, we exported a cut rag, so this is processed leaf, value of around about $15 million.